Joe Tigay is managing partner at Equity Armor Investments. Joe, Lam and Seagate are struggling a little bit after their report. Seems like the reaction for a lot of these chips has been to kind of sell the news of their good earnings. What about Qualcomm? Are we going to get a repeat? You short, you long, you interested or not?
Yeah, I am interested. I'm interested in just looking at the chart. Of course, it's done phenomenally. Still off its highs that we saw earlier in January, so I think maybe a positive result could get there. I think just looking at the flow, looking at where the market maker move, I think that it's setting up nicely for just a little bit of a trade, short-term action. Yeah, maybe some of that's baked into the cake already. Of course, Qualcomm is up this week with the rest of the market, but the market knows those concerns that you just were talking about. The market knows the supply potentially could be limited in this really crucial month coming up of March when this 5G is all coming along. So that's all baked into the cake. Now, whether or not how Qualcomm spins that on their earnings, it's anybody's guess, and that's something I'll be very interested to see.
Some of the companies in the 5G build out, especially as we saw for the likes of Oracle and stuff, some of the switches, some of the other components outside chips, there's been a little bit of a dicey outlook, partly because there's a ton of competition between the likes of like Aristanet and Oracle and these companies. The chips, though, have been rock solid. And Joe, there's so much expectation of 5G that a company like Qualcomm, I think, has macro implications too. Because if they say, hey, this 5G thing is moving slowly, it's not going to be good for anyone.
No, and certainly if the global economy were slowing down, I guess you could make the case that would be happening too. But no, I think anything happening in China would maybe just be a blip. Hopefully we aren't witnessing the start of the zombie apocalypse, right? I mean, hopefully it's just going to be a little blip, and hopefully they'll be able to get back online in a couple of months, like worst case scenario. And strangely enough, like these little blips that we see, with natural disasters here in America, sometimes those are buying opportunities for the market, even though it is a big travesty for those affected. But there is a lot of stimulus being injected. There is a fiscal stimulus in China, and you have to assume if the economy in China does slow down, that they're going to come to the plate with more just hard boots to the ground stimulus, just building things, because that's what they've done historically whenever they've had a little dip in their economy. So it's interesting to see. It'll be interesting how it'll all play out. Of course, this earnings is what we're all looking at today. Sorry if I'm off on a little tangent.
No, you basically don't fight the history of China reaching in to save the economy, basically.
Yeah, so Qualcomm today, we're expecting to report. Market making move is about 5.5% to 6%. Right now, $99.50 is what I was looking at. And I'm looking at a March butterfly. I'd want to play it to the upside. Maybe it'll come closer to those Jan all-time highs. It'll go right into that sweet spot for 95 for me if I get about that market maker move. Of course, looking at buying the 90, 95, 100 fly in March, paying 75 cents to do that. Max gain, of course, would be $5, or $4.25 would be the profit. And I, obviously wouldn't make that right away because it's a March spread. I got a little time for that to work for me. If it just kind of grinds up, that's the best case scenario. Or if we get a pop right after earnings, maybe I could sell it out for a nice winner. Yeah. On a short-term flip.
All right, implied move 5.5%. It's not looking for a monster swing. And look, you get basically 3 different strikes, so you can also kind of take them off depending on the size of the move, right? So you've got sort of a layered trade here, but not too much time on it, right? Absolutely, this is a pretty earnings-sensitive move.
Yeah, just about a month and a half, of course. Yeah, maybe we get to 95. Maybe I could take some profits on by buying one of those call spreads back, buying like the 95, 100 call spread back, just be long the 90, 95 call spread. Just hoping anywhere above 95 would be my max gain, would be my ideal there. But of course, yeah, I'm looking for some to the upside. I've got a little bit of time for it to work in my favor. And honestly, if we just are here, we get zero move, the 95s are probably going to come down faster than the 90s because I'm short 2 of those versus only long 190. So I think it's a volatility neutral trade. It's a long delta, a little smaller long delta than just being long the stock trade.
Okay. All right, looking for some upside here in Qualcomm. We'll be breaking down the earnings after the bell here on Market on Close. Joe Tigay, appreciate it as always, down at the CBOE. Looking right now at some gains ahead of the report, 1.5%. Joe's managing partner at Equity Armor Investments.